So we just got Ford's Q1 earnings report, and I did not expect this. There are some things in here that were truly shocking that we're gonna get into. So first thing, let's get into, and by the way, the margin that you just saw in the turnout was not a typo. And then the headline revenue came and actually beat expectations by a substantial 1.67 billion. So you would think this is pretty good, and it is. And earnings also came and beat by a significant almost 25%. So you might be wondering, what is the problem? Well, this is the problem, and this is their EV business, which they call Ford Model E. And look at their latest delivery numbers. This came in super low, incredibly low. In fact, they just sold only 12,000 cars, down from 30k. And this is pretty significant because we know that Tesla actually started dropping prices here, and this is pretty much the same thing that just happened to BYD and probably happened to GM as well. The thing is, GM doesn't break out their EV business the same way that Ford does. To give you a point of comparison, look at Tesla's delivery numbers, which came in at 427k. Now, if you compare that to Ford's 12,000, it becomes a pretty ridiculous point of comparison. But Tesla received a lot of flack for this exact number because they dropped the prices, but they didn't grow as much as people were expecting. But these price drops are putting a lot of pressure on Ford, and Ford's CEO just said that they're not interested in getting into a price war with Tesla. But these numbers indicate that they're already in a price war with Tesla, whether they want it or not. And the thing that really did it for me is look at these margins. My God, the last quarter they came at negative 40%. But this quarter, they came at an astonishing negative 102%. How? How do you lose this much money? I think there's a pretty good indication that you need volumes high in order to maintain margins semi-high. But negative 100%, that means you're selling a Mach-E for 50k and you're losing 50k, meaning that to produce that Mach-E, it cost you 100k. That is ridiculous. This negative 102% margin number makes Tesla look really good. And I promise you, GM's margins in terms of similar to Ford, they just don't show it like the same way that Ford does. In any case, when you actually compare it side to side, look at this. In fact, when you look at Tesla's margins, that 18.3% that was so disappointing to a lot of people, including myself, doesn't look that bad anymore, because the difference between Tesla and everybody else just increased, even though Tesla's absolute margins on a nominal basis are lower. Anyway, it's not all bad for Ford, obviously. Their legacy business, especially pickups, is doing really well, and that's why they beat on both revenues and on profits. These people are pulling in $25 billion on their ICE business. This is a significant amount of money still. They're selling a lot of pickups, and obviously this is not all pickups. There's traditional Mustangs here as well, but their margins are insanely good in this part of the business, upwards of 10%, and their ICE margins actually went up. But here's the thing, there's no competition. There's no electric pickup trucks in the market right now to be able to compete with this part of their business. So essentially the Ford F-150 has free reign, and this is what's saving Ford. Another thing that was interesting is their Ford Pro, and this is just their equivalent of the services, and this actually, their margins actually came in pretty well. This is actually better than Tesla's service margins, which are around 4 to 5%. That's why my estimate for Tesla, I always thought that Tesla could actually go upwards of 10% in terms of services. If Ford can do it, why can't Tesla? But this is also a bright spot for Ford. So anyway, they're also saying that their EV business is going to have a negative 20% margin by the end of this year, and maybe even be profitable by the end of next year. But with current margins dropping to negative 100%, it's pretty difficult to believe those targets. This puts a lot of what we just saw for Tesla in perspective, especially when we're getting a lot of the BYD and GM earnings as well, and everybody's just coming in pain in terms of electric vehicle margins. So this 18% for Tesla might not be as bad as we expected, because the difference, the delta between Tesla and the rest of the competition is actually widening, even though nominally Tesla's margins look bad from a historical perspective. But that's just because Tesla has such good margins. You're competing against their old history, which is exceptional. Anyway, there's a little bit of a breakdown for Ford's business for Q1 and puts everything else into a little bit more perspective. Thank you very much for watching, and I'll see you next time.